So here, they also carry, right? They also carry a higher degree of risk as a result of market volatility. Growth is one key factor investors consider along with others such as value and momentum. Below, we explore the best growth stocks to watch this month and offer a detailed explanation of our methodology for compiling this list. All data are current as of May 30th, 2025. Best growth stock, right? Stocks to watch in June 2025. Ticker, company, sector, market cap, price, all singular, not plural, right? Ticker, VGIL, LZMH, not LVMH. CRVWV, NVTS, okay. Company of Visual Neuroscience Inc., LZ Technology Holdings Limited, CoreWeave Inc., the Vitas Semiconductor Corporation, AIVA Technologies Inc., Ruan Nguyen Edai Technology Inc. Sounds like Chinese, right? Ruan Nguyen. Soft Wind, right? Ruan Wind, D-Wave Quantum Inc., MT, right? MNTN Inc., Oklo Inc., Dave Inc., Russell 3000. Just if I have to select companies out of this list, I would say a CoreWeave, and LZ Technology Holdings, and Ruan Dai sounds okay. Sector health, technology, commercial services, technology services, electronic technology services, electronic technology producer, manufacturing, finance, market capital, right? Wow, $53.43 billion, 4.77, right? That's huge. So price 726, 111. Those are okay. 30-day return. What the 324%? Wow, how come, right? How come? Growth stocks in the current market environment. In general, growth stocks tend to perform better in periods of economic expansion when the growth of borrowing is low. When the cost of borrowing is low. Though inflation is lower than it has been in recent years, higher interest rates and slowing economic growth mean that the current environment may not be ideal for these firms. That said, not all growth stocks benefit from the same market conditions. For example, companies that enjoy a particular competitive edge within their industries or a dominant position in the market may be more likely to grow regardless of the macroeconomic environment. Similarly, firms in a hot industry that is experiencing significant growth may also outperform independently of other factors. A recent example has been technology stocks focused on AI. Although an industry sell-off following the unveiling of a competitive AI platform by Chinese firm DeepSeek in January 2025 is a reminder that these conditions may change suddenly. Health technology and biotech firms are often present in lists of top growth stocks thanks to their potential for massive breakouts following strong data about a new product or launches of a blockbuster drug or piece of equipment. Despite turbulence due to inflation and a slowdown in product launches, this sector may still be poised for significant growth due to an aging population and increased healthcare spending, with national health expenditures climbing to $4.9 trillion in 2023. Another good expression, right? Health expenditure. Health expenditures. National health expenditures. PCW, right? PCW. PWC. How we chose the best growth stocks. In our growth stocks screen, we focused on companies listed on either the NASDAQ or the New York Stock Exchange. To ensure that the firms we screened are well established, we excluded the stocks trading under $5 per share, those with a market capitalization under $300 million, and any with a daily trading volume under 100,000. Additionally, companies with growth in excess of 1,000% were excluded as outliers. From the list, we selected the stocks with the highest 30-day returns to complete our ranking. In many cases, companies with a strong recent history of outperformance relative to industry peers or the broader market value have built momentum thanks to positive company or external news, favorable market sentiment, or appealing technicals. If these conditions remain the same, these companies may experience continued growth in the future, though past performance is not an indicator of future returns, right? That's good expression. Past performance is not an indicator of future returns, right? Past performance is not an indicator for future returns. If that's not a good expression, I don't know what else. How to invest wisely in growth stocks. Besides 30-day return, there are many key financial ratios that are helpful to use to identify potential growth stock investments. Using multiple metrics provides a fuller picture of the benefits different candidates offer, their financial positions, and how the market views them with respect to potential future gains metrics. Earnings per share EPS growth. Earnings per share EPS growth is a measure of the percentage increase in companies' earnings per share over a given period, typically year over year. Positive or accelerating EPS growth indicates underlying financial health and suggests the potential for future returns. Price to earnings ratio, right? I thought earnings per share, it's year over year, right? It's calculated over year over year. Price to earnings, PE ratio. There was a earnings per share and price to earnings. Price to earnings ratio is a comparison of company's stock price and its EPS. Higher PE ratios suggest that investors are bullish about a company, but may also signal that it is overvalued. On the other hand, a low PE ratio may mean that a stock is undervalued relative to the industry or the broader market, or that investors are not especially optimistic about its prospects. Price to book ratio. Price to book ratio is a measure of a firm's market value against its book value, or the net value of the assets on its balance sheet. Some contrarian, right? Contrarian. Well, let's find out the exact pronunciation, right? I've encountered these words several times. Contrarian. I would say contrarian. Contrarian. Contrarian.
Contrarian. Contrarian.
Contrarian.
Contrarian.
Contrarian. Contrarian. Contrarian. Contrarian. Contrarian. Contrarian. Some contrarian investors believe that a low P/B ratio indicates an undervalued stock that may have growth potential. However, P/B ratios can vary significantly from industry to industry. So it's important to take stock of how a particular company compares with its peers. Take stock of, right? Take stock of. How to find growth stocks. Investors don't have one single method for identifying promising growth stocks. Factors such as financial health, management, returns, and market position relative to industry peers are all helpful to consider, right? Looking at prospective growth stock investment, you should consider the company's revenue, EPS, and profit margin history. Companies with a consistent record of increasing earnings may be likely to continue to grow into the future. It's best to avoid the stocks paying a dividend if you are interested in growth potential. Companies paying a dividend are opting to not invest profits back toward investment in company growth. My company, KT Korea Telecom, the number one cloud service provider and number one telecom carrier in Korea, dishes out 2,001 per share as a dividend, right? That's about $1.50 per year per share, and we are not a growth company, right? We are 130-year-old company, I think, something like that. So we're not a growth company. We gives out a lot of dividends. Identifying firms with a relative industry advantage over their peers depends upon the specific sector and industry. For instance, some industries like healthcare may be quite opaque to investors without special expertise. In other cases, it may be easier to identify a sustainable competitive edge in the form of a unique product, technology, or service that a company offers. An example of a competitive edge is NVIDIA's core NVDA data center processors, widely viewed as advantageous over rival products thanks to their system scale integration capabilities. A company's management and corporate governance can also be helpful clues to its growth potential. How have the firm's leaders navigated challenges and taken advantage of opportunities in the past? Looking to historical earnings reports can show whether a firm has been able to meet its goals, including the area of forecasted EPS and revenue performance. Lastly, share price performance can be an indicator of future growth potential. Looking for companies that have higher stock price gains than their industry or the broader market. When making a comparison, it's helpful to benchmark a firm's performance against the Russell 1000 index. As of May 30th, 2025, the Russell 1000 had returned 7.75% in the last 30 days. The stocks in our screen above have all significantly outperformed this level, potentially suggesting the prospect of future growth as well. A metric like a compound annual growth rate, CAGR, can also help to compare two companies more directly, right? Compound annual growth rate. Are these the best growth stocks? It is difficult to assess which growth stocks are the best. In reality, growth stocks in general, and these companies in particular, may not be suitable for each type of investor. Growth stocks may exhibit a higher degree of volatility than some more established, large peers, because many growth stocks are companies making aggressive maneuvers to expand operations, and because these moves may or may not succeed, investing in growth stocks can carry certain risks. Further, it can be difficult to predict which stocks exhibiting growth characteristics, such as the metrics identified above, will successfully generate outsized returns. Investors interested in growth stocks should keep in mind that recent performance history is not a guarantee of future returns. The comments, opinions, and analysis expressed on Investopia are for informational purposes only. Read our warranty and liability disclaimer for more info. As of the date this article was written, the author does not own any of the above securities. Why? Competitive risk-free with $1,000 in virtual cash. Put your trading skills to the test with our free stock simulator. Compete with thousands of Investopia traders and trade your way to the top. Submit trades in a virtual environment before you start risking your own money. Practice trading strategies so that when you are ready to enter the real market, you've had the practice you need. So let's find out the authors, right? About the authors. So let's see the companies, right? Visual Neuroscience, LZ Technology Holdings Limited, CoreWeave Inc., Navitas Semiconductor Corporation, AIVA Technologies, Ruanwin Edi Technology, D-Wave Quantum, MNTN, Oklo, Daewoo, Russell. Okay, I'll check you out, right? I'll check you out. Thanks for listening. Have a wonderful Friday, right? Wonderful Friday. Okay, bye-bye. Before I go, I would like to go over the expressions that I decided to remember, right? Past performance is not an indicator of future returns. Potential growth stock. What else? Man, I forgot. Past performance is not an indicator of future returns. Health expenditures. Health expenditures. They also carry a higher degree of risk as a result of market volatility. They also carry a higher degree of risk as a result of market volatility. Growth stock, right? Growth stock. Thanks for listening. Have a wonderful, wonderful Friday. Bye-bye.